Good evening, everyone. It gives me great pleasure to welcome you to tonight's webinar, which will be all about credit control. The idea behind expert webinars is to connect business owners with experts within certain fields who can give practical advice on their subject. And if we can all take home 3 or 4 points from each presentation and implement them into our own business, then hopefully it will have an incremental effect, and you should be able to see this effect on your business and also on your bottom line.
Okay, so yeah, thanks very much, Paul. Welcome to everyone who signed up tonight for the presentation. As Paul has already said, this presentation is about credit control. It's called Get Paid and Not Played, and the whole idea of this is it's more about debt prevention rather than debt recovery. And I'll go on to talk about what credit control actually is, and also what you can do within your day-to-day business operation to improve payment times, and to reduce bad debt and hopefully eliminate bad debt as well. So before we just really get started on that, it's worth me just mentioning a little bit about myself, who I am and how I know what I know. I used to have a business in Liverpool supplying fresh produce and other fresh food to the food service sector. So all your hotels, restaurants, bars, cafes, schools, things like that. There was lots of credit given out in lots of different ways, right down from cash on delivery to a few days credit, 1 week, a fortnight, a month, 60, 90 days, anything you can think of it. I was offering that kind of credit. And also the types of clients were those types of clients who were quite likely to go bust at some point. It did happen to me quite a lot over the years. I ended up selling my business with a turnover of approximately £2.5 million at the point of sale. My debtors list, as you can see there, was approximately £250,000. But the key figure there was my bad debt was pretty much always less than £1,000 a year, because we were just doing the right things. But let's make no mistake, I learned lots of lessons over the years, and lost lots of money learning these lessons along the way. So hopefully I can pass on these lessons to you guys, and if it helps you in any way, then that's fantastic. So these days, what I do with One Up Consultancy is offer general business support and advice to SMEs in pretty much every area of running a small business. I was that type of business owner that wanted to have a go at everything, so I'm very much the generalist, although I do specialise in operations and credit control, helping you grow your business. And like I've already said, everything I teach, everything I talk about, everything I help clients with is all based on my experiences as a business owner in a very operations-based business, really. It was very, very busy as well. And so I tend to take a real-world approach to things, as I like to put it. I like to think I can empathise with a small business owner, really. So let's get started, really. So credit control, essentially, is all about managing risk. And like anything, when we have a risk of something happening, it is all about how we manage it and how we mitigate that risk, really. So the risk here is quite blatant. If you are providing an upfront product or service, then there just is that risk that people just don't pay you, whether it's on time or even at all. So we do need to ask the question, what can we do about it within our business? And what I'd like you to think about, really, is trying to implement a culture in the business of getting paid, or let's get paid, as I call it. The comparison to this, and the reason I take this tact, is if you think about health and safety, and that there's a compliance, it's an area of compliance. There's lots of rules, there's lots of regulations, lots of things that you have to do, you have to follow. But they've been very clever in the world of health and safety, in that they've tried to implement a culture of a duty of care, that everybody has a duty of care towards each other. So regardless of the rules, regardless of the regulations and any compliance that we have to follow, quite simply, if it's not safe, then it needs addressing, and everybody's responsible. And I think the same can be said for credit control. If there's something happening in your business that staff can recognise, or anyone who's maybe not typically responsible for getting paid, making sure that the company gets paid, it'd be great if everyone could just keep an eye out and try and help out, really. So the first question that I think I'd like to address is just, what is credit control? Lots of people that I come across tend to just think that credit control is all about chasing invoices. Once you've issued those invoices, let's just chase like crazy and try to get paid. But credit control is just so much more than that, and it was worth me putting a definition on the screen there just to clarify that credit control is really just all about what you are doing within your business to manage the amount of credit that you're giving out to customers, whether that's a time-based credit amount or whether it's a monetary value. It really doesn't matter. It just needs managing. And the way that we manage that and make it clear to everybody how we are managing it is by creating a credit control policy within the business that details just everything that needs to be done, everything that people should be doing to make sure that the credit is being managed effectively. And so who would need a credit control policy and who would need to consider doing stuff like that? It's any business that sells a product or service up front. So even if you don't intend to give much credit, even if it's a payment straight away, but there's a potential opportunity for it to stretch to, well, I'll pay you tomorrow. So it's just maybe 1 day's credit, which could stretch to a couple of days, which is stretched to a week. Before you know it, you've got, your accidental credit of a month being given out. It's well worth every business considering this, really, and just thinking if it could happen to us, let's address it so that when it happens, it's not a massive problem. And once you've created some kind of credit control policy, I like to think that everybody in the business, and also your customers as well, should be aware of it, really. So it's not just all on the accounts department just to keep chasing money and to make sure that customers are paying when they should do. If everybody's aware of what they can do within the business to help the company get paid, then I think it's well worth putting in a credit control policy and trying to implement this culture of let's get paid into the business, like I mentioned earlier. So why don't customers pay? I think this is a really, really important question to ask. And I found that there was 5 areas in my experience why people don't pay. The first one is in the top right of that diagram, which is basically your customers have got no money. Whether it's poor cash flow, they're going bust, or whatever reason is, if you've got no money, very difficult. They're just not, they just can't pay. Sometimes there's just nothing you can do about that, really. If there's no money there to collect, it doesn't matter what debt recovery specialists you use in the world, it can be a complete waste of time. The second one going down there is poor organisation. I had quite a few clients over the years who they actually had good businesses, but they just couldn't get a grip of their paperwork at all, and it meant it was a real problem for us. Always sending copy invoices, copy statements, which unfortunately just made the problem worse, as they just couldn't organise themselves, even with extra information. So it was quite frustrating, that, really. And the onus was upon us to make sure that the customers were getting as much help as they could from us to make sure that they understood exactly how much money they owed to us. Pre-planned, this was a horrible circumstance. It does happen. I don't know if anybody's actually had this happen to them themselves, but I did have customers who would open a business, and then they would have opened that business knowing that they would be withdrawing all the cash at some point, so that company would end up going into liquidation. However, they would open essentially the following day with a brand new company with exactly the same business, and all the creditors were left with unpaid bills from the previous company. So quite vindictive, but it does happen, and that's something that's called phoenixing. If you've never encountered it before. No control is another area, another reason why people don't pay. Very similar to poor organisation, but slightly different in that I had quite a lot of customers who were just very, very chaotic. They could be profitable businesses, but they just couldn't get round to actually paying bills. They just either had poor management structure, or they had just lots and lots of little obstacles getting in the way of them actually paying the bills. And again, it was a very frustrating one. It was something that we had to be on top of these guys, chasing them for payment all the time. And the final one is arrogance. I think this does happen to most businesses, really, but you just encounter those customers that just decide that they'll pay you when they want to pay you, and not when you've agreed to be paid. So regardless of what they've signed, regardless of what discussions you've had, they just say, look, I'll pay you when I want to pay you, not when then we will tell you to pay. So those are the 5 areas, really. If there's any different types of reasons, then please feel free to flag them up to me. So we get on to managing the risk that we talk about. This really is about explaining that you need to really think about using your business operation and any resources that are within your business already to manage how your customers pay. And when I talk about business operation, lots of people don't quite understand what that term means. The business operation covers everything within your business, right from getting that initial lead or inquiry, right the way through to that customer ultimately having dealt with you and actually ended up paying you with money in the bank. And an effective credit control policy that you have should really go into detail about what everybody is doing within the business operation to see how they can help the business get paid. And technology these days can make it so much easier for us to put control measures in place, but also to help customers pay as well. Obviously there are lots and lots of different ways that people can pay these days. It's a lot more than cash and checks. We've got all the online banking facilities now with direct payments, backs, chaps, all that kind of stuff. But we've also got direct debits, which are very accessible now to SMEs. We have things like PayPal, card payments, extremely accessible now as well. Things like Square and iZettle and Stripe. There's no PCI compliance or anything like that. It's very, very easy. And also technology can help when We've got situations where maybe we need to put a customer on stop, and so you can prevent your staff from, selling things to particular customers. Maybe they've reached a credit limit, or or whatever. For whatever reason, you decide to put them on stop. You can put a physical barrier in place so that nothing can be sold to that bad paying customer until the issues are addressed, really. So that's what we want to talk about, really. Within this is how to use the operation. This next slide I've put in here really because looking at credit control within a business is not an issue of compliance. It's not like HR, it's not like health and safety, but I think it should be viewed as if it is compliance, because it's so important. And if it's not addressed effectively, then all that happens is that you end up as a business taking a very, very reactive approach to things. When things go wrong, it's like what we do. So effectively, there's no debt prevention. It's all about debt recovery. When it goes wrong, what do we do? And that reactive approach can take up a lot of time. And you've got a lot less control over what's going on with your debtors list. So that reactive approach can really lead to high stress. You're worrying about not getting paid. You're worrying about those customers, what's going to happen. And it can be really damaging to yourself. And also as well, when you're chasing these debtors, it's a really poor use of time. It takes up a lot of time. It takes up a lot of worry. You can't think straight. And so therefore that affects your growth as a business. Instead of spending all your time thinking how to grow your business and thinking in a positive way, all you're doing is trying to save the business, really trying to make sure that you're getting your cash in on time. And obviously, worst case scenario, if you can't get your payments and you can't get the money into your business, then you could potentially become a bad payer to your suppliers as well. And ultimately, your cash flow is effective, and worst case scenario, that can end up with your business going into liquidation too. So in order to create a decent credit control policy, or in order to even think about how you'll be managing your credit within your business, what you need to do is you need to really think about what is called the order to payment process. So as you can see on the screen there, the order to payment process is quite literally what happens when you get that lead. What are the stages from the lead generation, whether it's an inquiry, your phone rings, you get an email, a web inquiry, social media, or maybe you're just targeting sales, maybe you're doing cold calling. What happens with that information along the chain right until the point of where you get paid, and who's involved in that, and how can we use those people, or how can we use those resources at each stage to manage this risk? And so lead generation, of course, we could get people just calling us up out of the blue, and then we have to kind of deal with that. But it could be a situation where you're targeting a client that you've looked at them and you said, yeah, I think that client it would be a great client for me. So we're going to send them some prices. We're going to send them some of our offerings, and we'll see if we can get them on board as a customer. But of course, if you do a credit check before you do that, and you realise that the potential client has a good credit rating, then that means that you can give really tight credit terms, really decent credit terms. You can give excellent prices, and then if you get that client, then everything's great because they're quite likely to pay, and you'll have a good trading relationship for some time. But of course, the opposite of that is true as well. If you find out that target client has got a poor credit rating, then you'll be able to go in with a lot higher prices, a lot shorter credit terms, take a bit of a chance. If they do decide to deal with you, then obviously you can get a bit more money in a shorter space of time. But then obviously if it goes up a bit sour, then it's not the end of the world. You've not lost too much. So, and even if they don't decide to deal because you've gone in with high prices and poor credit terms, it's not really the end of the world. You've not really lost much either. So that's kind of an example of how you can start thinking about your credit control really before you've even got that potential client on board. So once you've got that lead, once you've got that inquiry, what happens next? Is somebody has to go out and see that customer, or maybe they just need to talk to that customer. You need to deal with them in some way. That could be your sales team, could be a member of staff in the office if you're a small team, could just be admin or something like that. And they need to kind of get some information off the customer. They need to get them to tell them who they are, the name of the business, how long they've been trading. Maybe they need some references, all that kind of stuff for a credit application form. And that information then needs to go to the accounts to open an account. Again, it could be admin that do this, or it could be an accounts team if you're lucky enough to have an accounts team. But that accounts team or that account opening stage cannot be done properly if the previous stage has not been done correctly and not gathered all the information correctly. Following the account opening, then there's order receipts. Usually, again, from sales, someone has had to contact that client and someone say, right, okay, we're ready to deal. What is your order? What do you actually want from us? Let's take that from you and take it to the next step. Again, it can't really be done unless the information's all in place. Everybody knows exactly who they're dealing with, exactly what's going on. Once they've received the order, it then gets put together, whether it's a product or service, and whatever it is you're delivering, it then obviously needs to be delivered. let's think about delivery of your product or service. It could be, a remote service or remote delivery in some way, if it's maybe an electronic product, but it could equally be something physical. If you were maybe a trade wholesaler, for example, maybe if you were in a timber yard or something like that, it's quite common that, you'd go in, you place your order, and then you might end up actually speaking to the guys who are actually cutting the wood for you. So this is just your production team. This is your guys in the warehouse, who really should not be that customer facing, but they are. And there's an opportunity then for them there to start chatting and start learning more about the customers, and things come out. You do get signs that maybe they're struggling in the business and things. And over time, you form relationships which can be quite useful, as we'll discuss later on. Once the product's actually being delivered or the service is being delivered, then goes to invoicing. Invoicing is a crucial part. We take it for granted these days with lots of electronic products we have on. But I've been that guy, that's invoiced the wrong company, not put correct details on, not made it easy for them to pay by putting my bank details on, things like that. So when we invoice, it's important the accounts team, again, have the relevant information so that they can actually bill correctly and actually goes to the correct person. It might be a situation like in my previous business, for example, we were delivering fresh food to a site. So I would have staff actually going into a business and actually delivering a product on site, and we were leaving a paper invoice. And we were then taking a chance that it was down to the customer to make sure that paper invoice actually made its way all the way up to the accounts department, maybe in another office, maybe in a different part of the country, something like that. So it was quite a risk. So obviously when emailing of invoices came in, it made that a lot easier and a lot more effective. So it's things like that we take for granted. It's like, well, we left an invoice, but the customer still might not get it. So it's important to think about invoicing and making sure that we've covered all the bases and making sure that the customer has every opportunity to receive the invoice correctly and to make sure that they can pay correctly. And then obviously once they've got everything, hopefully that they do pay. That's obviously the account's responsibility. And then you can see that if they don't pay, then that's when we're looking to take further action. So maybe you've not thought about your order to payment process before, but it's well worth sitting down and just thinking, within my business, who does what and how can they help me at each stage? If you're a one-man band or there's maybe just a couple of you in the company, you'll probably end up being all of those departments, but it does still happen. And if you look at it from that perspective of those 9 stages, might be less stages, might be more stages, depending on your business, you can actually start to see a lot more about your process and what you're doing right and what you're doing wrong. I stuck this next slide in just to really highlight the responsibilities within credit control, because I had in the past, I have had staff who've just said, look, it's not my job to get payments. I'm just here to do this, that, the other. I had to train the staff. We had to teach the staff to say, look, yes, that is your main job, but this is always something that you need to do. Again, back to this culture of helping the business get paid. It's everybody's responsibility, really. So, of course, the board, the management, the owners of the company, massively their responsibility because they own the business. But then they would employ an accounts team to make sure that everybody's paying on time. So the accounts, it's essentially that's their job to make sure. So those two at the very top, of course, it's their major responsibility to make sure that the business gets paid. But then, as we've seen in the order to payment process, sales and office and admin staff always likely to be customer facing. And so they're the ones with the relationships. They're the ones who can actually speak to the customers if there's a late payment or if there's a problem on the account or something like that. It's well worth using these people to make sure that if there is an issue, that it's not just some random person in accounts ringing up saying, please can you pay us? There could be an issue. That's perfectly normal. Maybe somebody's gone on holiday or maybe somebody's had an accident and they've just not been able to get payment sorted or something like that. So using those front of house, those customer facing staff can make a massive, massive difference in the business. And the same with delivery and production. There's less responsibility there because usually they don't carry as much responsibility within the business as sales or office staff, but there is certainly an opportunity for them to help out. I'll give you an example with my previous business. When we had our delivery staff actually physically delivering to site, it would happen from time to time that we'd see the staff on site having a rows with the management team because they hadn't been paid. So if the staff on site weren't getting paid, then why would me as the supplier, why would I be getting paid as well? So they're the kind of little things that I'd like to pick up on. Same when we have staff going on site and maybe there'd be a flood or there'd be a ceiling collapse or maybe even a fire, things that might close the business down for a few days that I might not learn about for a few days, but my delivery team might be able to report that back sooner rather than later. They're the kind of things that your delivery team or maybe your production team or anyone who's customer facing at any point in their job can keep their eyes and their ears open to pass on relevant information. So these next few slides really now are just kind of detailing some key points on what to think about in your credit control process and what you might include in your policy, so that you can start thinking about what your staff members are doing and what resources you need to use within your business to help you manage your risk. And one of the biggest things to start off with, and I was really poor at this when I first started out, is just knowing who you're dealing with. It's so tempting as a business owner when you get that potential client in front of you to just seal the deal, get trading, and you don't even know who they are. So when the time comes to pay, they've disappeared and you've no idea how to chase them, you've no idea where they are, who they are, and it can be a real nightmare trying to find these people. So if you're targeting a business or you get an opportunity from someone, research those potential clients as much as you possibly can. Whether that just means going on the website, asking around, just searching on the internet, looking through papers, whatever it is, find out as much as you can about them. It can make a massive difference. Credit checking, for me, was a game changer in my business. I think every B2B business should be credit checking these days. I'll just jump straight to the bottom there just to kind of cover that off. There are a few companies out there that do credit checking now. It's pretty cheap when you consider the value of what you get out of it. I'm a big fan of Credit Safe, but there are others such as Ristis, Graydon, etc. But one of the good things about the credit checking is that obviously you can see a company's credit status when you first meet that company, but then over time that credit status might change. And these companies are fantastic for ongoing monitoring of the customer status. And it's incredible what you can find out about your customers sometimes. So it's well worth getting into something like Credit Safe or Ristis, just to monitor your customers and make sure that things aren't going sour for them. It's almost like an early warning system for you. And then of course, that middle section there, once you do have your clients in front of you, your potential new clients, before you start trading, get them to fill in some kind of account opening or credit application form. You can stick on these forms pretty much anything you want. People tend to fill things in. Things like company type and directors, owners, or all that kind of stuff, where they live. Maybe you get a copy of driver's license or passport or something. It's really up to you, but anything that you feel you may need if the time came to chase for payments later on, or maybe if you had to get formal. This is the time to get that information. It's very hard to get it later on once you're trading and you've actually given some credit. So once you've done that and once you've got all the information from your clients, it's really important to set some terms and conditions. Now, I think we're all guilty of not reading the terms and conditions, but it's well worth getting some put in place and getting somebody to accept these terms and conditions. And what is really important is just laying out what you will be delivering and what will happen if the customer won't pay, so that you know you're telling them up front what you're going to do, and they can understand what's going to happen if they don't keep to their part of the bargain as well. And when the time comes, or if the time comes to take some debt recovery action, some formal action, this can be a real game changer as well in terms of saying, look, I've clearly said that this is what we're going to do, and the court can look at it and say, yeah, we agree, and they can issue a CCJ or something. It can be very, very helpful when you're in that formal situation towards the end. And then once you are trying to set the terms and conditions for trading, and you're looking at how to set limits, you need to review each client on a per client basis. So don't do what one of my clients has done at the moment, where they've just given everyone 30 days credit, payment on 15th of the following month. It's essentially 45 days credit, because it just doesn't work. You'll always have people who will pay, but you'll always have people who won't pay. And it can be very difficult to get that money once you've given that credit and you've overextended yourself, really. So you need to be thinking about setting your limits on a per client basis, and review those limits as well. Of course, you can start low and build up credit agreements as time goes on. Maybe review every 3 months or something like that. It's all about doing the deal with the customer when you first start. And if they won't deal, if they're not happy with that, then unfortunately sometimes you've just got to walk away. It's all about risk. It's whether you want to take that risk or not. My experience over the years is just don't take too much risk. It's just not worth it. But again, it can vary on the type of customer in front of you and what type of sector that you're in. And then, of course, providing multiple payment options. I mentioned this earlier. It is easier than ever to make payments these days. But if you haven't got multiple facilities for people to pay their bills with you, then obviously it's just a barrier, essentially. So, if you can sign up to some kind of card payment system or even direct debits, or just give multiple opportunities for people to pay, then it's very difficult for them to use the old excuse, oh, my checkbook's with the account, I'm sorry, I can't pay yet. It's like, well, don't worry about it. You can pay by card or you can pay by bank transfer now. It's super easy. So give those options to your customer and make it really difficult for them to squirm out of not paying. And then once you're up and running, once you're trading, maintaining customer relations and building that knowledge base about your clients on a regular basis, absolutely key. And this is where your sales teams and your account managers and your Your customer-facing staff can really come into their own, because these are the ones with the business relationships, as we've said before. And you can use these guys to ask for payment. They're the ones who will be, they'll know everything that's going on with the customer. They'll know whether they're in a good position or in a bad position. And they can usually pick signs, when things are going wrong for them. So it's great to be able to use those teams and maintain those relationships. And also as well, if your customer does get into difficulty, if you're quite matey with those customers, or you've got someone who's matey with the customer within your business, then there's a good chance that they'll feel like they want to pay you because you've been nice to them over the years. And when you don't have those relationships, it can be awful hard trying to get money out of people. And I know that from personal experience, really. I've already mentioned about delivery teams often being customer facing, and they can also pick up on payment problems or anything that might be wrong with the customer. But your accounts team as well, it can be difficult for the accounts team to know exactly who to contact at the customer end when things do go wrong, usually because they're not customer facing. So it's important that everybody works together to support the accounts team, that when things do go wrong, that they know who to ring when the time comes. And if it's a manager that they're dealing with on site, and of course they need to know how to escalate the problems, really. They do need to know how to get in touch with the directors or the owners, particularly if they're not on site, particularly that often, really. So maintaining customer relations and maintaining that knowledge is absolutely massive. So like we said before, trying to get paid then, making sure that you're invoicing correctly, sending the statements and invoices to the right person, addressing the right company, and sending them by email so it's secure. Maybe send it several times if you have to, if you find that they're not getting picked up, making sure the email addresses are correct. Maybe even using automated software so invoices never get forgotten to be sent out, or statements never get forgotten to be sent out. Lots and lots of tools we can use these days to make it easy. But these are kind of basic things that people do get wrong. I was guilty of the years of getting stuff like this wrong. But as soon as you start getting it right, you do start noticing massive differences. And then also as well, I would recommend that you inform your staff of any problem accounts. I'm not saying that you need to tell all your staff the intimate details of your customers, in terms of their financial situation, but it's worth saying, look, ABC Limited is just, not within their terms at the moment. If they do ring up to place an order or something, please, let the accounts team know, or please let someone in authority know so that we can have a chat with them, we can see what's actually going on. And then of course, if you do get those problem customers, just don't trade, or certainly at least don't allow any extra credit if you haven't been paid. It'd be really difficult if you've got those those customers who you consider to be good customers because they may be chalking up a lot of money with you on their credit account. But really, not trading is better than not getting paid for work that you've done or products that you've provided. It's not trading is not losing money. It's just not earning money. And the other thing that someone told me a few years back, which always stuck with me, is that a customer that doesn't pay is not a good customer, regardless of their size and image. We see that quite a lot with the bigger companies. If you're dealing with any big companies and they're just taking the Michael, let's say, it doesn't matter. Just stop trading with them. It's just not worth it. You won't win in the end, really, or you'll have to go through a long debt recovery process before you do win. So definitely worth remembering that a customer that doesn't pay is not a good customer, regardless of who they are, really. And so then when they don't pay, what next? Putting an account on stop or trading on upfront payments only is an absolute must. It can be a very difficult thing to do, like I say, particularly if you've got those customers who you do consider to be your bigger customers, but sometimes it's the only option. And I've been in that situation where I've not put customers on stop because I just thought they'd get themselves out of it, and they don't, and then I'm the only one that suffered, really. So it's something that I learned from experience. It's a hard thing to do, but it's well worth doing. And then, of course, once you have reached the point where they're not paying you, and you have put the account on stop, you still need to maintain contact with those people and monitor the company status. You keep asking for payment. Sometimes it's whoever shouts the loudest, whoever asks the most often gets paid. If you just go quiet on them, then they will forget about you and they'll be paying the other people who'll be shouting instead. And then if all else fails, if everything that we've said so far, if you've followed everything as best you can as to what I've spoken about so far, if it doesn't work out, then I highly recommend when you need to take formal or legal action, use a specialist, or such as a solicitor or a debt recovery specialist. The process for debt recovery is so rigid. It's well worth following to the letter, and usually specialists and solicitors who specialise in debt recovery will be much better than you. You can wing it yourself through taking some pointers off Google or something like that. But again, my experience, I had lots of success using a specialist at this, and it's something I would highly recommend, really. So to summarise what I think you need to do to think about putting a credit control policy in place, if you want to have a crack yourself, first thing to do is really know who you're dealing with. like I say, credit checking, get them to fill in form, all that kind of stuff. Very, very straightforward. It's very basic stuff, but it's really, really important. As is getting your T's and C's in place, making it clear to everyone involved who does what and what's going to happen if it goes wrong. Think about trying to implement this culture of getting paid amongst your workforce, getting everybody to work for you. Everybody of the mindset that if the company doesn't get paid, then the staff don't get paid. And if everyone works as a team together, then it can really make a difference. When you are chasing payments, don't be afraid to ask for the payments. Sometimes it can be very difficult to keep ringing and keep asking, but it does work. It sounds a bit silly, but it does work if you just keep asking all the time. It's your money, so why wouldn't you ask? It's nothing to be ashamed of. And then if and don't be scared to walk away from a customer as well. If they're not good customers, if they don't pay, it's just something that if you take one thing away from this evening, that is definitely a phrase to take away. They're not good customers if they do not pay. And then if everything you've tried your best and you've done everything you possibly can, taking some pointers from this evening from myself, if it's not working, then get some professional debt recovery support in place if all else fails. That can be super effective. But obviously, I think there's a lot you can do in the front end to really, before you need to get to that stage. But unfortunately, sometimes it does happen. So what next? So from tonight's presentation, I appreciate it's quite a lot of information I've tried to cram into the half hour there. What I try and do is I can help you improve your credit control policies, your processes and your operational processes. And really, the way to start is by conducting an order to payment review. And I just look at everything that you would do in your business, in your operation on a day-to-day basis, and look for areas that need improvement. And then from that, we should then be able to create some kind of credit control policy that will be bespoke to your business, or recommend any other solutions that you could put into your business that would make a difference. I can help you with a business health check as well. If you felt that you needed some external support to come in and look at different areas of your business, just say, how can we do this better? How can we do that better? And I can actually provide a hands-on solution to help implement those changes as well, should you wish. And then ongoing support, something that I do offer clients is just that outside perspective on a business and being a sounding board that can be very effective. Something I learned quite late on in my previous business, just how effective that can be. And nowadays I do it for a few clients and it's absolutely fantastic. You can save actually tens of thousands of pounds we have over the years. So that's me, that's my presentation. Obviously, I'm open to any questions.
Thank you very much, Alex. That was a brilliant presentation. Lots of really valuable information there and lots of practical tips that we can start putting into our own businesses. Question from me, Alex. Now, we touched on who has the responsibility within the company, and this is probably coming more from my personal experience as a salesperson.
Yeah.
I've been very guilty of being more focused on just mentioning my sale rather than ensuring it's properly qualified. So how do you really ensure that the sales team are engaged with this?
I think, like I say, it's more about trying to introduce that culture into the business. So it's making them aware that, let's not just be dealing with anyone and everyone who shows an interest in dealing with us. Like I say, just because they're a big client, just because they can, potentially add a lot of revenue to your sales day book, it doesn't necessarily mean that they're going to pay you. So it's making that clear to the clients, and making sure that they're not just opening accounts without following the proper procedure of carrying out credit checks, and just doing the basics. Like I say, making sure they're not just saying, yeah, just deal, and they haven't got directors to sign the credit account form or something like that. There's lots of things that I think are sales responsibility in particular. That, as you say, they just get overlooked because you're so desperate to secure the sale. Yeah. And it's really, really important to make the staff aware that it's not about doing the deal; it's about doing the deal and getting paid. That the two things go hand in hand. What's the point? What's the point of doing the deal if you don't get paid?
Yeah, that's a really good point, and I think that's probably something that needs to be incorporated into the training. That it's not just about getting the sales numbers; it's a whole. It's holistic within the business. And there's a really good point you made about the size and the image of some companies that you're working for. I mean, we had one of the companies I used to work for had a really big educational institution, really well known, very prestigious. And one of our biggest customers in terms of how many products they had on hire from us, but actually they were one of the worst for paying. And they kept calling in and I was happily adding more to their account because it looked great for my figures. But it got to the point where then I needed to go on site, do a full asset review, speak to their accounts team, and then start wasting my time rather than picking up sales. And it had a massive knock-on effect. But because of their name, we was sort of at the time were happy to take those sales.
Yeah, exactly. And you think about, like I say, I'm a big believer in credit checking. One of the benefits of using a credit checking service these days as well is you can actually get lists of these companies now of credit. So it's like buying data lists and doing some cold calling. If that's your line of work, then you can actually filter it through the credit companies and just filter it by credit rating, so that you're only targeting companies with a credit rating of, say, I don't know, 65, 70 or above, so that you know that they're credit worthy. What's the point in chasing these customers who are never going to pay you? It's a total waste of time. So doing all these front end things can obviously make a difference, in the long run in terms of getting paid, but it can be quite savvy sales thinking as well. You can just do so much with this information. It's worth using it properly.
Yeah, definitely. Is it worth, perhaps when you're doing the training, getting accounts and sales and, admin in the same meeting so that everyone knows each other's pain points rather than waiting for something to flare up and then creating conflict?
Absolutely. Like I say, it's about this culture of let's get paid in the business. Everybody needs to know, everybody's on the same team, aren't they? And that this attitude of it's not my job, it's not my job to get paid. It's just my job to get sales in, or just my job to answer the phone. It's for me, it's not enough. And I think, lots of businesses have issues with getting paid, whether it's on time or at all or whatever. So why wouldn't you use your staff? Why wouldn't you use all your resources to help you out? So as you say, getting everybody in a room, whether you do it in big groups or small groups or whatever, it doesn't matter as long as everybody is aware that they can help. Then give them the opportunity, or demand it of them. Put it in the terms and conditions. Put it in their contract. How they operate, or in the handbook or something.
Yeah, definitely. Excellent, thank you. I've got a really interesting question here. How easily do business owners admit that they have a cash flow problem or are spending too much time chasing their customers?
I don't think people like to admit this. I actually find it quite hard finding clients. When you put it out there, it's like I say earlier. I think most businesses have this problem in some way, shape, or form, and I think the emphasis is far too much on debt recovery rather than debt prevention, and that's why I try and do a presentation like this and talk about things like this, because I don't think that enough is done to think about debt prevention. So yeah, I don't think business owners do admit it, certainly not publicly. If you sat in front of a computer screen looking at your debtors list and everyone who's well overdue, it's hard to argue with your facts. So I think you're spot on there. People just don't think about it. They don't admit it.
Yeah, absolutely. I worked at a company a few years back that when you're doing your ring of why don't people pay, I think we had all 5 issues, quite frankly.
Yeah, exactly. It's common.
And it led to the point where, we were doing really, really well on sales, but actually in terms of the business moving forward, it was very, very difficult because we had so many legacy issues. It got to the point where we actually had to spend more time chasing debt than actually trying to focus on sales moving forward.
Yeah, it's a false economy.
Yeah, absolutely. Okay, it looks like that's all the questions we have in. We'll just give another minute in case anyone does have any further questions. But just whilst that's happening, if you want to just talk quickly about how to get in touch with you. Yeah,
so obviously I appreciate it was talking quite quickly there. There's a lot of information to try and get in the half hour. But if anyone would like to have a chat with me about how I may be able to assist you with your business, whether it's with your credit control or your operations, or just some external support, whether it's just that outside perspective or something. I appreciate, most people think their businesses are quite unique, quite individual, and there usually are idiosyncrasies within every business that need to be considered when you're looking at something like a credit control policy. But most things are quite common, most things are the same, and sometimes it might just be a case of you can't see the wood for the trees just because you're in the mire of the job on a day-to-day basis, and having somebody from outside who can come in and just do a review, just assess things, it can make a massive difference. There's usually always at least one thing that jumps out and that I can say, look, why aren't you doing this, or could you improve this, or let's do something different. So there's always a free consultation chat, whenever I chat with potential new clients. So if you want to drop me an email, or if you want to give me a call, then please do. I'm happy to talk. I'm happy to see if I can assist in any way. Thank you very much, Alex. That's been absolutely fantastic. And thanks to everyone who attended. See you on another webinar soon. Thanks again, Alex. Thank you very much. Cheers. Bye-bye.